Hi, good week to all. This is Kelvin here again. Welcome to this week latest edition of our weekly technical outlook on the major stock indices, the SPX 500, the Nasdaq 100, Hong Kong 50, the Japan 225, as well as the German 40 index for the week of 14th of Feb to 18th of Feb 2022. So I believe that most of you are pretty much anxious what's going on in the global stock market, the trend bias, as well as key levels to watch for this week, given the heightened Russia-Ukraine tensions that start to build up over the weekend. So before we start, let's take a look at the disclaimer slides first. All right. So before we go into the technical trend bias for this week, as well as the key levels to watch, so before we start, as usual, we take a look at the momentum analysis across the globe for the entire spectrum of global major benchmark stock indices from US, Europe, and Asia. So as you all know that over here is last week on Friday, it actually, or even start on Thursday due to Fed official bullets ultra hawkish comment, then coupled with on Friday, close to the mid session, where US National Security Advisor highlighted there's a possibility, or I would say there's an increased possibility that Russia will attack or invade Ukraine this week. So that causes a bit of a spook the financial markets or the US stock market as per se. So that actually ended pretty much badly on Friday, which actually erased the initial gains that were actually recorded at the start of the week. So all in all, the US stock indices ended in the red for the three benchmark majors, for the three major benchmark, the SPX 500, a negative 1.8%. The worst hit was the Nasdaq 100 due to its higher propensity to tech and growth sector. So definitely a geopolitical risk coupled with liquidity squeeze driven by more hawkish Fed rhetoric. That doesn't actually bode well for tech and growth stocks as per se. So definitely it's pretty much nature for or neutral, pretty much we call it logical for the tech and growth stocks to actually underperform the benchmark indices. But what's interesting over here is that the value and the cyclical stock held relatively stable or only declined by negative 1% on at the end of last week, which is the Dow Jones Industrial Average. And what surprisingly is this is due to some small cap stocks that managed to actually help the Russell 2000 index by capping off with at least a gain of negative 1.4, positive 1.4% on last week, at the end of last week. So all in all, what we could see over here is not really a very, very nasty sell-off that we witnessed earlier on at the start of the year. All right, so still it's still relatively okay. I would say that if you dive deeper into the various we call it momentum we call momentum statistics of the US benchmark indices. But what's interesting over here is if we will dive into the 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 the, the, the rest of the world. So the rest of the world, right, it seems where is still holding pretty well. So definitely Hansen and Hansen Tech Index, they were actually Nikkei 225. This as well as the German DAX, because all these one, two, three, four, five major global stock indices, they were really close before the 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 news of this U.S. National Security Advisor mentioned that there's a possibility of Russia attacking Ukraine this week. So the market really closed before this news flow came out. Okay, so but nevertheless, let's take a look at later the technical chart of the Nikkei 225, the German DAX, the Hansen Index, which I opened today. In fact, they fared relatively well. I mean, they did not fall off close to 2% or more at the start of today's Asia session. So I would say that all in all, it's still relatively defensive or okay that it hasn't snowballed into a what you call a tremendous risk-off event as certain key support levels still holds. And what's interesting over here is we start to see Hansen and Hansen Tech Index starting to actually slowly inch up decent gains throughout the week and its prior 4 week ago. So if you look at the prior 4 week, it's an average of 1.21% for the Hansen Index and the Hansen Tech Index 0.55%. over here. So overall, the Nikkei 225 also showing signs of a bit of improvement as well, based on last Friday's close. That's a weekly gain, and the German index managed to actually inch out a weekly gain of 2.16%, versus a loss of negative 4.3% in last week. So all in all, right, if you look at the momentum analysis by taking out the difference between the weekly performance of last week against its prior 4-week average, I would say that it's doesn't depict the kind of a sign of that we will start to see a tremendous risk of impact based on the momentum analysis from here. That means, i.e., we has not it has not triggered last week price action has not triggered. I would say has not triggered a major risk off event yet, based on the momentum analysis figures that I share with you all now. All right. Now, then let's take a look quickly at the sector. So definitely on Friday itself, because of that drastic uh, fall in the benchmark US indices, especially hit the worst on technology and growth stocks. So we start to see the tech and the communication services sector, which consists of Facebook, as per se the light, and Google. They actually they're the worst performer among the 11 sectors, down negative 3.86%. The information technology down negative 2.9%. So what's leading the gains for last week was the energy, managed to actually inch out a gain of 1.75% for the week, and materials 1.14%, and almost unchanged for the financials. So energy definitely is benefiting for a resilient or a firm WTI crude oil prices. All right. Now, very quickly now, let's take a look at this chart. Okay, so this chart is I like to share because it has a nice reaction every time the VIX index hit a key resistance level. Okay, so key resistance level is what I call a fear. So if the VIX index is going upwards, it represents fearfulness in the market. If the VIX index is coming downwards, it represents greed, or we call it a risk-loving behavior of the market participant. So we are trying to actually have a gauge of where is the extreme fear level and where is the extreme risk-loving level, we call it, i.e. greed level. So if the VIX hit a relatively extreme fear level, there's a reason to actually say potentially there's too much fear in the market, where it could lead to a capitulation. That means, i.e., it could be a bullish reversal in the SPX, at least in the medium term, because this is a daily chart. So I'm looking for a medium term horizon. So every time this VIX, right, we have a very key resistance level that I draw from this descending trend line resistance, of linking from the highs of 15th of June 2020, October 2020, and 29 January 2021, linking against this horizontal resistance, the confluence at this level, at this close to this 32 key resistance region. So what we could see is that last Friday, the VIX actually rallied and hit close to this 32 level, key resistance level, and before it starts to retreat slightly off towards the closing hour of the US session, to the last few hours of the US session, and ended below the 32 key resistance level. So there was a test and there was a retreat. So what it means that over here is that it could be potentially we have already reached a stage of relatively higher levels of extreme fear, where we could now start to see another leg of potential capitulation again, which is, i.e., potentially positive for the SPX 500 to actually shape a potential up move. If you look at the previous prior price action of the VIX hitting at 32 on the 24th of Jan over here, then also on the 3rd of December hitting at the 32 key resistance before it actually start to shape higher movement on the price action of the SPX 500, and i.e., given this observation again over here, and with the SPX still holding above the key long-term pivotal support that we set for this quarter, 4240, so i.e., I could not validate any further bearish down move at this moment in time, unless SPX starts to break below 4240. That means as a weekly close below 4240, then we will start to see a major risk off scenario. Until that takes place, then we could actually validate it from a technical analysis point of view. All right. So now let's jump into the technical chart that I share with you all for this week, and the key levels to actually we call it the key levels to actually pay attention to. All right. So these are our next gen platforms. So let's start off with the daily index, the daily of the SPX first. So just a quick recall. So this is my outlook. This is a weekly chart. So weekly chart has a higher time horizon. That means I'm expecting this price action to evolve within this coming quarter. That means talk about 3 months or so. All right. So this is the current evolution, potential evolution that we have based on my quarterly outlook. So how to find our quarterly outlook? I already tweeted it in my social media account, my Twitter. You can take a look there. So after the end of this presentation, I'll share with you how to actually look for my social media account in Twitter. It's a CMC of my CMC official Twitter account. So as you all could see, 4240 was actually the nice reaction of on the on the 24th of Jan low, it bounced, and right now it's attempting to come back and retrace at this 50-week moving average over here. So definitely 4240 is the key long-term pivotal support level that we have already set for this quarter, means Q1 2022. Still looking for a last potential move of hope and irrationality. So in elliott wave term, we call it that long-term circular Roman big wave 5, which has a maximum risk level of 4170/400. If it starts to break above 4990, then thereafter we could start to see that potential negative 30% to negative 40% major corrective down moves or corrective down move impulsive sequence starts to unfold from there. So if you are trading if you are looking for a shorter term perspective, let's say for this week, we still are in potential favor of a push up to complete this last move. So this last move could take between 1 to 3 months, because this is a quarterly outlook. So this last move of hope and irrationality. So now on the daily chart over here, this is the daily chart. So what we could see over here is that it did a retracement. All right. So 4240 was the key long-term pivotal support we set for last week. So the current all-timer area is 4805. So definitely there will be some shorter term intermediate resistance level if we were to watch out for this week. All right. So what are those levels? So we were only able to see them much clearly if we zoom into the shorter time frame chart, which is the 4-hour chart. Okay, let me take a look. So what I'm doing over here is a top-down analysis, starting from the weekly, daily, and the 4-hour to determine what are the key levels. All right. So if the price action on the short term hit a key long-term level, this is where we got to pay attention to. That means we cannot be outright bearish on that particular instrument or the index that we are monitoring based on a proper technical analysis approach. So what we could see over here is that it 4240. So what we could see is that the last few weeks it managed to stage a rally up to 4945.90. So what it did again on before Bullen's comment, which is the hawkish Fed official comment on Thursday, and before that Friday sell-off induced by that comment from the U.S. National Security Advisor, stating that there's a possibility that Russia will invade Ukraine this week. So that actually lead that sell-off on Friday. But what interesting over here is that prior to that, it managed to hit our first resistance that we set for last week, 45.90. So very clearly, 45.90 is indeed a weekly upside trigger level that we will set for this week. That means, i.e., in order for prices to go higher in the short term, that means for this week, yes, this is the first resistance level. If it doesn't break above this first resistance level, we may start to see sideways movement. If it breaks above, that means we will start to see a very clear 45.90 breakout. So this is a 4-hour chart. If you have a 4-hour close above 45.90, it will increase the odds to actually do a further higher high to test the next resistance at 47.45/75, which is the upper boundary, okay, pardon me, which is the swing high area of 13th of Jan and uh yeah 12th of Jan and 14th of Jan. All right. So what we could see over here is also the wave one expansion level. So taking into consideration how this is the end of the potential wave four, bracket four, on the medium term perspective, this is the short term impulsive wave one. Last week potentially may see the completion of that corrective wave two. So if I were to do a retracement from the low of this bracket wave four to the high at 45.90, it actually stopped at 50%, which is 440 last week low, Friday low, and 61% at 43.60. All right, so this is a kind of my short-term intermediate support zone that I'll be watching for this week. But definitely the key. Okay, let me draw another line here again. So this line went missing. 45.90. Okay, So 45.90 will be the key potential upside trigger level. A break above or 4 hour close above should take us up towards 47.45/75. So definitely, if we will have a weekly close below 4240, which is the long-term pivotal support level that I highlighted earlier on the weekly chart, then we will start to see the start of that major corrective down move. So in first step for the week, it could take us down towards the next support level at 40.35. All right. So before we go, what is 47.45/75? Also, if you look at the Fibo expansion linking from the lows of this 24th of Jan, which is the end, the potential terminal level of the corrective wave 4, project up to the short-term impulsive wave 1 slash, project it to last Friday's low. It will take us to close to the one-time Fibo expansion level, which is also a based on the Elliott wave and the fractal analysis is the minimum. We call it expected wave 3 target. Okay, so with that, we are still having a bullish bias on the SPX 500 for this week, but it needs to clear above 49.90, 45.90, pardon me, to actually increase the odds of higher high. Okay, now let's go next to the higher beta index, which is the US Nasdaq 100. So looking at the US Nasdaq 100, also shaping a similar fashion like the SPX, except that it actually underperformed due to its higher sensitivity towards we call it a negative sensitivity towards a higher interest rate environment that could have hit more badly on tech and growth stocks. So 13,900 is the key long-term pivotal support again to watch. Let's go to the weekly chart to have a recap over here. Okay, so this 13,900 level is still holds, which is very close to the last 24th Jan low. It did have a weekly close below it. So as long as this level still holds, we could still have a view of a rally of last hope and irrationality to hit this risk level at 17,590 slash 1800 150 before shaping that negative 30% to negative 40% major corrective down move sequence. So given that the daily chart itself is still like pretty congested. So it seems to me that it's still now sideways between 15,540 and 13,900. So what we could do over here is for this week, strategy still remains unchanged. So using the 13,900 as my key long-term pivotal support that I set out. So what we could see is it could be similar, tracing out the same Elliott wave potential wave count that was actually I shared with you on the SPX 500 on the shorter term. So the high of 2nd of Feb could be the end of that minor impulsive wave 1, the short term wave 1. And uh, last Friday low could be the terminal point of that corrective short term wave 2 slash. So if you look at where does it stop in terms of the Fibo retracement, taking from the low of 24th of Jan project to the high of that wave 1 slash, it actually stopped close to the 61.8% retracement, right, from last Friday's low. So what we could see over here is definitely 13,900 is the key long-term pivotal support level that it must hold to for us to maintain that bullish bias. So I added in an upside trigger level as well by taking into consideration of this short-term or minor descending trend line resistance linking the highs of 2nd of Feb and the reaction off from it on the 10th of Feb, now acting as a resistance at 14,840. So if we could have a 4-hour close above 14,840, a breakout from this short-term descending trendline resistance, it could actually increase the odds in first step to test that intermediate resistance level at 15,540, and a break above it should take us higher towards this swing high area of 13th of Jan, and yeah, swing high area of 13th of Jan at 15,990. And if you look at the Fibo projection, taking from the low of 24th of Jan, project it to the high of 2nd of Jan, towards the end, touching the low of 12th of Jan is also equivalent to the close to the 1.236% level, 1.236 Fibo expansion level. All right. So still having that bullish bias on the Nasdaq 100 as long as 13,900 holds. But however, if we start to see a weekly close below 13,900, then we will start to kickstart that potential major corrective down move. So in first step, we should see a further slide to test the next support level at 12,970. Okay, now moving on to the Hansen Index or the Hong Kong 50 that is still showing signs of resilience. So yes, we see a push down this morning over here. But so far it hasn't break below the intermediate support at 24,000. So last week we have a first resistance at 25,200. So it came very close to it, printed a high of 25,151 on 10th of Feb before it did that pullback. All right, after on Thursday, means after Thursday Fed Bullens comment, and on Friday, that news that was being triggered of that Russia and Ukraine heightened tension. But so far it still remains quite resilient. I mean, it didn't break below 24,000. That's an intermediate support that we set. So everything still remains the same. So the key levels didn't change. So what we do is that we still keep the key levels. So 23,380 was my key pivotal support that I highlighted last week. This level here. So as long as this level holds, we will still having a view that it could retest 25,200. A break above 25,200 should take us up towards this key medium term resistance zone at 25,870 slash 26,220, which is the swing high area of 22nd of October 2021, and also this upper boundary of this major expanding wedge configuration since the high of 18th of Feb 2021 level. It's very clearly over here. So this is the resistance right now. That's I think it. And if you look at from a Fibo expansion level, taking from the low of 20th of December, project it to the recent test at 25,200 on the 21st of Jan this year, and project it the oops sorry, let me do it again. Okay, project to the high, project to the low. Okay, it's close to one time Fibo expansion level. Okay, so as long as 23,380 holds, we are still expecting it to shape a push up towards this resistance zone, as per mentioned earlier. But however, if we start to have a weekly close below 23,380, weekly day, sorry, pardon me, if you have a 4-hour close below 23,380, it could take us down to the long-term key pivotal support at 23,000 figure, slash the excess, which is the low of 30th of December at 22,660. So why this level is key, let me have a quick recap again on our quarterly outlook. So this is a weekly chart of Hansen. So 23,000 was the key pivotal support I set for this quarter. So I'd like to see that how the price react of this 23,000. We start to see a series of bullish candlestick. And last week, this was last week candle, so not as bad as the SPX one, or the US stock indices, still pretty much resilient. Why this level is key, because it is the long-term circular trendline support that is still in place since the great financial crisis low of October 2008. Based on a significant economic event that occurred in the past. All right, so definitely this is a key long-term pivotal support to watch to maintain any tactical rebound that we will have in the shorter term on the Hong Kong 50. So now moving on next to the another Asia benchmark indices will be the Nikkei 225. So just to have a quick recap, Nikkei 225 is still stuck between a range configuration. So last week we have a bullish bias to play up within the range configuration because it managed to actually stage a bounce in a week or so, about a week before last week. Right, so now let's go to the quickly recap on the daily chart. So on the daily chart, what we could see over here is that this is the bounce image, the bounce up, which is 26,880 slash 150. Okay, taking for the excess, it managed to take a bounce from here, but still kept between this upper boundary of this resistance zone that we highlighted is a sideways range at 27,900. It hit that level and retraced on Friday and Thursday. And before now, it time to shape a bounce again of the 26,880 slash 150 support zone of the range configuration. So 26,900 is actually the pullback resistance from 20th of August, previously supported, now it's the pullback resistance. And if you look at the longer term configuration, right, since the 16th of Feb high 2021, which is close to about, this is close to about a 30-year high, 30-year high. And 14th of September 2021, it refused to shape a clear bullish breakout from 30,716. And what we could see here is it could be a potential impending double top configuration. So if we start to see a clear breakdown below this 26,880 slash 150, there is a weekly close below it. it could actually kickstart the start of a major corrective down move for the Japan 225. So all in all, right, what we could have over here is for the shorter term, we're still looking for a bounce within this range configuration over here. Okay, so now if you go to the shorter term, right, on the 4 hour chart, okay, 4 hour chart over here, okay, so this is the level 26,950 that we have, the intermediate support level. So all in all, right, we still looking for a bounce within this zone, within this range configuration. So still looking for a push up again to actually retest 27,900 slash 28,110. Okay, so last week it actually did a test there before it did the retracement. So still expecting this push up again. So if we have a breakout above 28,110, a 4 hour close above it, it could take us up higher towards 28,220, which is actually the descending trendline resistance that is linking the previous, that preventing the bulls from breaking out since 14th of September 2021 from here. All right. Then, however, if we start to have a 4 hour close below 26,150, it could take us down much lower towards the next support level at 25,250 slash 200 level, which is the 1.236 Fibo projection, taking from the down move of 14th of Sep. Let me do it again. Okay, 14th of Sep to 6th of October, then project it up to the high of high of 16th of November. All right, at this 1.236 Fibo expansion level. Okay, let me do it properly. Let's remove this. I didn't. Yes, anchor it properly. Let's try to move back again. Yeah, at 1.236. Okay, so all in all, right, we are still having that bullish bias as long as 26,150 key medium-term pivotal support holds. Still looking for a bounce up towards the sideways range configuration that is evolving on the Nikkei 225 right now. Now, on to the German index or the German 40 index over here. So you could see on the it's very similar to the Nikkei 225 or yeah, the Japan 225. So since it's high on 16th of on 19th of November, and as well on 5th of Jan this year, it did manage to break above this fresh all-time high level that was met previously at 16,280. Then thereafter, it just start to trade within this sideways range for close to since November, December, January. It's close about 3 months already. 3 months still stuck inside this range. So last few weeks of price action managed to bounce off from the lower boundary of this range at 15,000 080. So if you look at this configuration over here, since from 6th of October towards the high of 17th of November, it could actually form in the form of a triangle range configuration. Okay, so we do expect that this kind of triangle range configuration to actually continue to unfold in the coming week ahead. Okay, unless it managed to do a very clear break above 16,280. So all in all, right, it seems it's now coming close or back close to the range configuration support level. So we will still maintain that bullish bias on the shorter term. So let's go to the daily chart. But I will actually add some levels to actually as a trigger level to actually increase the odds of further push up. So on the 4 hour chart over here, you could see that uh, we are actually having this trend line descending trend line resistance that is capping the previous lower highs of this movement of this German DAX index from moving up higher. So this trendline resistance starting from the high of 5th of Jan now is actually acting as a now is actually a resistance at 15,460 level. So I'm still using the key medium-term pivotal support that I set for last week, which is the same 15,080 level. So as long as this level still holds, we're still looking for a push up to play within this range configuration. But I will add a 15,460 as my so-called intermediate resistance level. So a break above this 14,460 to take us up towards this previous swing high area of 3rd of February at 15,670 slash 7 15,735 in the first step. for this week resistance level if the German 40 index managed to continue to see a further bounce off the 15,080 key middle-term pivotal support. But however, if we start to see a 4-hour close below 15,080 level, it could actually did another intraday slide to actually test the next support at 14,800. So what's 14,800 level is actually the swing low area of 4th of May, 12th of May, and as well as 6th of October that previously managed to cap the bears from sliding further. So definitely a break below 15,080 level, for close below it could see another test of this key major support at 14,800 level on the German 40 index. So with that, to sum up everything, yes, we start to see a bit over on Friday. There's this risk of this heightened tension over Ukraine and Russia. So, but what we could see here, the price of the indices that I shared with you all, the price action, they are still holding on to key support, pivotal support level. So that being said, that I could not validate a further potential bearish move from this situation if you were to look at based on strictly on a technical analysis perspective, and also if I will look into account of the relationship of the VIX level and the SPX level, if the VIX managed to actually retreat off from a key resistance level, which is the 32 level, which could mean that last Friday move was a bit extreme in terms of contrary opinion analysis, which we could be ripe for a potential bullish leg of the SPX 500 if the market starts to be too fearful, and if the news environment in the or the geopolitical risk environment in Ukraine and Russia starts to improve slightly from this week onwards, it could easily kickstart another round of potential upleg based on the relationship of the VIX and the SPX historical price behavior I shared earlier on. So that being said, over here is that I added on some intermediate resistance level to watch. So a break above such intermediate resistance level could more or less firm up that potential, we call it bounce or up move that we are still expecting on the major stock indices for this week. So with that, have a great week ahead. So before we go, let me share with you, this is my social media account. So this is my Twitter account. So you could actually follow me at it's free, just open our Twitter account, so you can follow me at Kelvin SC Wong. So once you follow me, you're able to read my daily commentary, which I commented almost every day before the at between 8:30 p.m. 8:30 a.m. Singapore time to 9:30 a.m. Singapore time. What are the key things to look out for this week? So definitely today's morning we have the DBS key Singapore Bank. So I share with you the outlook, not say outlook. I share with you all the key figures of DBS Bank, and I will share also a technical chart on my view. What is the key support levels to watch? So do give me a follow to get updated with what's going on in the global financial markets. So with that, have a great trading week again, and I see you again in my next presentation.